You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we've got an interview with the managing director of the Financial Data Exchange, or FDX, as you may know them, Don Cardinal. A timely conversation, I think, where we're going to be discussing what they're doing to try to create standardization in terms of data flow in the financial services industry, which has all kinds of really important ramifications around personal data rights and open banking, which are both top of mind topics these days. And it turned out, I think, to be a very interesting and wide-ranging conversation. So hopefully you'll enjoy that coming up in just a minute. I'll remind you before that we are always here with the Big Cast and new content on Tuesdays. You can get us via wherever you get your podcast, Apple Music, Spotify, etc., or directly at the Best Innovation Group website, big-fintech.com. Another thing I wanted to bring to your attention is Wednesday, April 17th, if you're listening to this right when it comes out. You will still have the opportunity to join us for our Credit Union Digital Town Hall, which takes place pretty much bi-weekly on Wednesday afternoons at noon Pacific, 3 p.m. Eastern Time. So April 17th is the next opportunity for you to join live for a great interactive conversation. You have to register in advance. It is free to join, but we do require advance registration. cutownhall.com is how you do that. And if you are beyond the date of April 17th, never fear, there will be another one coming up in a couple more weeks. And also, you can always listen to a replay and watch a replay for that matter. It's actually a video that's up there for posterity, so you can check it out. Frankly, I have no idea what JB, our Grand Poobah John Best, plans to cover this week, which are often my favorite episodes because the free-flowing, kind of free-ranging, real-time topic of the day kind of aspect and the open interchange on what people want to talk about. Interchange may be a clue right there. I didn't mean to, no pun intended. Will be a good open-ended conversation. Also want to thank our sponsors at America's Credit Union Councils. Always appreciate their support. I'll mention that John Best and I will also be working, we're doing kind of a, I don't know what you want to call it, I think they're billing it as a reboot. Kind of a sequel, I would say, to the CEO Council Roundtable that we did at the Government Affairs Conference back in early March. This will be taking place on Tuesday, April 30th. The one that we did was actually reached capacity, and they wound up having to turn people away at the GAC because we filled the room. This will be some of the same topics, but with about 2 more months worth of information. We're going to be adding some other new, real-time hot topics of the day, as well as updates on some of the things that we talked about already around generative AI, interchange, the future of the branch, things along those lines. This is for CEOs only and for America's Credit Union Council members. But if you're interested in that and if you qualify, please do check out America's Credit Union Councils. And I think that's a great way to invest in the development and dialogue in the space as well if you're not already a member. We'll post a link to that one as well. A couple of things that popped up on my radar just in the last day or so. The Synthetic Memories Project. This is an interesting one. I just discovered this just this morning, as a matter of fact. I think it's being positioned as more of an art project than an actual kind of historical thing, but it's also a bit of an academic. It is using generative AI to create, as they put it, historical photos that do not exist. The idea is based on memories and based on first-person recollections of what happened in certain events in the past, where for whatever reason, true photographic representations of that may not exist. They go back and they make they generate those images to represent what happened in the past. I first heard that and my first thought was, count me out. That doesn't sound like a real good idea because, again, just the opportunity for misrepresentation, disinformation, things like that. Well, that is going to be happening anyway. But I looked at the website, and we're going to post a link to that one again as well, syntheticmemories.net. As I say, it seems to me to be a bit more of an arts organization, and it also it has a traveling exhibit around this. But one of the things it mentions on the website, it says that Synthetic memories intentionally employ early Gen AI models and prompt injection techniques, creating blurred, dreamlike visuals for two main reasons: blurred and dreamlike visuals. So they are trying to distinguish that these are not real. The point they make is images generated through this process should never be confused with photographs of real events. Amen. If they're on board with that, I'm good with that. We make it clear these are subjective depictions of the memories of individuals in order to avoid potential misuses or misinterpretations. I think we also know that we have plenty of evidence that memory is flawed. I've discovered that myself in a couple cases recently where things that I was pretty darn sure happened a certain way, I wound up discovering my memory was off in terms of things that happened, 10, 20, 25 years ago. There's an example for the photo if you click through the About page on the website. And as I say, intentionally blurred and dreamlike visuals. And I'm looking at one of a woman holding a crate. It's some kind of what looks like a dumpster. And it's got that classic telltale that we've talked about before. Her hand is messed up. For some reason, and again, they said early Gen AI models. Maybe this won't always be the case. But for some reason, Gen AI cannot get hands right. And here's yet another example. Usually it's just the number of fingers. Hers looks more like a lobster claw. It's weird. Anyway, maybe that's enough to prompt you to go out and check out that picture. Synthetic Memories Project, syntheticmemories.net. And again, if you go out to the show notes that we always make available as part of the podcast, you should be able to click through on them if you're going to Spotify or Apple Music, but you can certainly find them at big-fintech.com as well. Check that out. Another thing I thought was particularly interesting, Take on Payments, the blog put out on I think a weekly basis by the Atlanta Fed. They've always been, if you don't have that one bookmarked, you should. It's got a lot of great content. And I found the last few to be particularly insightful and kind of topical as far as interesting things going on. My friend Claire Green wrote one a couple weeks ago about Death Valley National Park and how they are no longer accepting cash for entrance fees because apparently in 2022 they processed $22,000 of cash-based entry fees as opposed to card-based fees. And that $22,000, according to their calculations, cost them $40,000 to process. Math doesn't work on that one. So, it's one of those interesting conversations. And, there's regulations and laws that are being passed in certain municipalities requiring private institutions, private companies to accept cash over the counter from a financial inclusion standpoint. And here we have a state or a national park, a federal, location that is not accepting cash. Doesn't make me real comfortable. I'm not sure I'm crazy about that one. You read the details, it's not quite as bad as that. There is, for one thing, most people are using card, and there is a couple of registered outposts just outside the park where you can pay cash, get a slip that then allows you in digitally. So, when you do something like that, it may not make, and we're talking about a pretty, unique situation of a very remote location. So I guess it's not too surprising. But anyway, I thought it was really interesting. Take a look. The Take on Payments blog, like I say, definitely worth checking into on a regular basis if you're not getting alerts from them already. With no further ado, FDX, Don Cardinal, the managing director, wanted to reach out to him because they've been kind of front and center with all the conversation around open banking. They are, probably the furthest along in terms of trying, and they've, quoted some pretty good statistics as far as their, reach, as far as the number of institutions and different entities they're bringing together to the table to talk about how we can have this kind of interaction and interoperability of data and creating a standard that will help foster the types of things that the CFPB is going to be mandating very soon. So with that, let's have a listen to my conversation with Don Cardinal. I'm here with Don Cardinal, the managing director of Financial Data Exchange, FDX, as they're better known. I think it's a timely conversation with everything going on with open banking and the Section 1033 data rights. Don, thanks for taking the time to talk.
Glad to be here, Glenn. Glad to be here. I enjoy talking about open finance whenever I can.
Me too. Let's kind of go back with some history. FDX is not new to the game. You guys have been around since 2018, and actually, if you trace your roots back, they even go a few years further back than that. Can you just kind of give us a quick timeline?
Sure. The FSISAC, which is our parent, they're a global not-for-profit cyber intel sharing organization for financial institutions, looked at the risks of held away IDs and passwords, as are called credentials, and said, there's probably a better way to do this than screen scraping. And so as early as 2014, 2015, they put up a group to try to move beyond that old 1990s technology of ID password-based screen scraping. And they created an API called the Durable Data API, DDA, if you see that in some of the documentation. But it didn't get a lot of uptake because the fintechs who would need to consume it looked at it and said, that's not really fit for purpose for what we need. And so it ginned along for a little while. DDA2 came out, still not a lot of uptake. Meanwhile, the fintechs decided to create their own institution, and with a couple of banks as well, called Initiative X. And at a certain point, we looked at it and says, we're not going to get anywhere. In 2017, the proposed principles under Director Codray of the CFPB came out. We realized if we don't do something, the government's going to write these controls and technologies, and that's not their strong suit. So the two groups decided to merge together in 2018. We went public in October 2018. I retired from B of A later that year and actually came to work as the first employee managing director of FDX in December of 2018. So I literally left work on a Friday and started work on FDX on that Monday.
And just to be clear on this, you mentioned went public, you mean kind of came out from behind the curtain. This is a not-for-profit entity, correct?
Yeah, it is absolutely not-for-profit. We're technically a 501c6, which means you can't, even though you can donate to us, you can't deduct it on your taxes, but we have no commercial interest whatsoever. We're not making money in this. I retired to come solve this issue to improve privacy, improve security, and get credentials out of the market for 120 million Americans.
That's interesting. I've heard of 501c3s and 4s. I hadn't gotten to the 5s and 6s yet. I got to look that one up.
Well, as a recovering CPA, I can tell you there's a lot of other ones as well.
You mentioned something else I think is worth getting into, and the whole thing about open banking and the CFPB. Let's come back to that too, because I think that's very interesting with some of the other stuff going on in today's rulemaking. But you mentioned those two different groups coming together. I think one of the powerful, kind of value propositions I've heard about FDX is you've got all the different constituents sitting at the table together. It's not a banking group. It's not a fintech group. It's not a retailer group. Can you say a bit about your composition?
Sure. I mean, we have over 230 member organizations, including some individuals and academics. That includes everything from certainly data providers, banks, brokerages, insurance companies, but also in fintechs, data aggregators, but we also have service providers. We also have academics. We also have not-for-profits, trade associations, consumer groups. I think one of the things we lucked into by watching what happened in the UK and Australia is we realized we had to cast a big tent and we had to have a very broad remit. And so we opened to one and all. And yeah, that's a lot of people to get consensus from. And we move forward only with overwhelming consensus on items. But that's not a bad thing, because when we as a community decide something or publish something, we can say the ecosystem thinks X or thinks Y or Z, and that's authoritative.
I noticed on your website, you've got a pie chart that shows kind of the composition by number. FIs, I guess, from what I saw, are the second biggest group. You got 61 FIs, I believe it says. Data recipients, I'm not sure exactly how you define that, 84. Well, first off, if you can kind of explain the recipients, and I'm also curious, based on the website, most of the FIs tend to be on the larger side. I think I saw 3 or 4 credit unions also on the larger side. What are your smallest FIs that are involved?
Sure. I mean, we've got some smaller FIs as well, community institutions. But remember, if you're coming to FDX or participating in any consortium externally, it takes a couple hours a month, and a couple hours that community institutions typically don't have. Often community institutions also outsource some or all of their tech to third-party service providers, whether it be core, QSOs, online service providers, or others. And so the technical impacts of a technical data standard may not directly fall on the staff, of the individual community institution. So you typically see the largest institutions who involve in different groups, not just FS-ISAC. You see Buy-in, you see FIDO, Bluetooth, et cetera. With respect to the smaller, we have PSCUs, QSO, Smiley Core. But we also have Mountain America Federal Credit Union, America First Credit Union.
I think I saw UW in Madison.
Yep, UW. Gotta love those guys. Gosh, who else? Credit Union of Colorado, Boeing
And to be
Employees Credit
fair, I
Union.
think I also saw you've got the ICBA at the table. So from a small bank standpoint, you've got the organization speaking for them, I guess, as
Yep.
opposed to the individual banks.
Yep. ICBA and CBA, I think, really do a lot to help their members. And I want to give a shout out to eFirst Bank in Colorado. eFirst is one of those unique small institutions that, given their size, you'd bet money they were on a core. They actually run their own tech stack. And
Really?
because, yeah. And so because of that, they're able to, I think, move faster in open finance than some of their similarly sized brethren. So shout out to our friends there. They've been members a long time.
So, I mean, you mentioned, with the ICBAs at the table, I guess, other than those credit unions that participate directly, I guess, would it be like PSCU that's got the voice of the credit union most firmly at the table for you? Or is there any other groups along those lines?
Yeah, I would say it's them. I mean, there are other trades as well that they're free to participate in, and we do have as members, and we do engage with them even when we engage with non-members as well. So, for example, as part of our briefing sessions with CFPB or other regulators, we'll reach out to Kuna and say, "Hey, we're going to be talking on this. Do you have any talking points? What do you think about this?" So, even though they may not be members, they're friendlies, and we do talk to each other.
Got it. Got it. We were talking a bit before. I was trying to think of the best way to, compare the role that FDX plays. NACHA came to mind for me as far as a standard setting body. You mentioned that that's not a perfect analogy, and you had a couple others. Can we want to get into that a bit?
Sure. I mean, NACHA certainly defines technical standards, but they also run a network, and that's how it's operated, and they allow people in and out and do that. We are just one piece of that. We're just defining the blueprint of how the data fields are lined up and how the stack should work. But we don't enforce operability. We don't negotiate contracts. We don't say who can or can't operate the space. So in that way, we're more like a Bluetooth or a USB. Bluetooth doesn't make the headsets. They just make the rules in a common place that everyone agrees to. And if you do get Bluetooth certified, it's guaranteed to work. It doesn't see your music. It doesn't know, it doesn't comment on your taste in music. It just guarantees that it's just going to work first time and interoperable.
Yeah, I'm curious now, just thinking about that a little bit more. So, when it comes to the API itself that you're actually setting the standards for, have you built the API or have you basically just set the criteria for the API?
We set the criteria. We're tech agnostic, but that being said, we do have a reference implementation as a kind of an example. We have a dev portal that you can go in and look at. And we do have some guidance. We have helper docs that are publicly available. And then for members, we have additional implementation guides that help people out. And what this group, and it's nice that we have 230 organizations from around the world, varying sizes, who've kind of listed out best in class advice for doing things. So you really are not alone with FDX. So it's not just a blueprint like you get from the home. You go to a big box store to get a part for your house, and you might get some materials on how to do it. You have a whole community here that wants you to be successful.
So it's kind of an open source Wikipedia version in some ways to kind of, you've got the network to go out to look at.
Absolutely. It's an incredibly collegial space. Comptroller Sue spoke at our event last year, and he said, this is unprompted, this is the most collaboration that he's ever seen in his entire career on a topic in financial services.
Interesting. Yeah, just to make it more concrete, particularly for folks who are not involved today, if a non-member financial institution wants to adopt or implement your API, how would they do that?
Oh, just come to our website. There's a spot that says, "Hey, I'd like a copy of the spec." We send over a EULA. The license agreement basically says you're not on the OFAC list because we don't want to send anything to sanctioned entities. And two, you promise not to patent it. But that grants anyone a license to use any version of FDX commercially in perpetuity. You can add to it. You just can't claim to have invented it.
Okay. So how do you, I mean, obviously you've got operating costs, you've got your payroll, you've got to keep this kind of the ship running. What's the revenue? I mean, obviously it's a not-for-profit, I understand that, but how do you generate enough proceeds to actually keep the operation humming?
Well, we have no commercial interest. Now we do have, if you want to, you use the spec for free, no problem. If you want to add to the spec, if you want to seat the table, if you want an active voice in the community, we ask that you join. Now, membership is based on size of institution. The larger entities pay more than the smaller entities. And so basically the largest subsidize the smalls. And we're okay with that. That's how groups like IETF, how FIDO, Bluetooth, and other consortia around the world work. And so it's a very tried and true business model.
I was going to
We
say, yeah,
also,
that's nothing new. I mean, that's a
yeah,
model that's been in place for some time. It's just kind of the nature of the beast when you're out there working on things like this.
yeah, we have a standing rule in FDX: never reinvent the wheel. We definitely look around and see what everybody else is doing and try to figure out best practice.
Well, let's transition from there into the whole notion of open banking, which obviously this API can go a long way toward helping to facilitate. And with the Rule 1033, the rulemaking going on, and I know you had Rohit Chopra actually speaking at the FDX conference a couple of weeks ago. How do you see that fitting? Would you agree with me, first off, that particularly for small institutions, I think it's often kind of viewed that open banking is something that's being done to them. It feels to me like it's not a one-way street. There's actually some positives that come out of it as well. What's your perspective on how it plays out for credit unions in particular for our audience, but small institutions overall?
Okay, so yeah, this is my public service announcement for open finance. And no, I think that's fair.
Yeah,
And let me give a little context. I'm showing my age. When online banking rolled out in the late 90s in most places, remember, it was the death of branch banking. Oh, brick and mortar banking is dead, and it didn't happen.
yeah,
And so you see a similar wave of FUD, fear, uncertainty, and doubt coming out with open finance. Open finance globally, in its history, looking at any jurisdiction, has not seen an exodus of customers in any jurisdiction, nor will it. If you're confident in your pricing, products, and services, nothing to fear. Now, APIs will be a net new channel, not unlike online became a new channel, mobile became a new channel. APIs will be a new channel in your digital portfolio, but that's it. And here's the cool part. We're seeing innovators look at this as not just data out, but data in. And let me give you an example. Can you imagine pre-filling an account application or credit card application or a mortgage app with data from another institution? So there's no errors and fat fingering. You can also, while you're connected up to that other account, verify that Glenn's account's got a couple of years worth of history. So the odds of him being a synthetic are virtually nil. If that's real time and for free, how cool is that? Because fewer errors in your application process means you get better quality applicants. Better still, let's say for a mortgage that you want to get bank statements, I can then pull those across from an authoritative source with no chain of custody issues in an ingestible format, which means no rekeying, no OCR. Well, that leads, the sooner you get that data, that leads to fewer abandons, because the longer an application sits there, the more likely someone is to abandon and go somewhere else. So again, more throughput means more revenue. And finally, because there's no chain of custody issues, no one's going to be adding extra zeros to their bank statements, just like we saw 2008, 2009. So you get better data, which means less fraud. So think about this as a revenue play. This is not a compliance play. If you view it as a compliance play, you've missed the point.
yeah, that makes sense. What about the notion? I know this kind of gets played up. It certainly got played up in the UK. I know it's there in the 1033 rules about account portability and the ability to switch accounts from institution to institution. Is that something that the API enables? And again, I would say if you're confident in your solutions and your offerings and your service levels, then you should have a net inflow.
We've never seen anywhere, and I'm happy to introduce you to anyone in any jurisdiction that has open finance and say, okay, show me where there was a mass exodus of consumers. And there really hasn't been. Now, the extent that data is there and you can pre-fill an application, great. That makes that go easier and faster. And there's less chance of, my clumsy thumbs, fat fingering data in a new account application is useful. And all the AML, EKYC you've got to do are certainly benefit from real-time authoritative signals. But there's still a lot that has to happen. There is no, again, there's just, legally, there's a lot of things that have to happen to open an account. Now, they can help you with that process, but I think that's the extent that having data available between FIs does.
Yeah. Earlier on, I tried to connect the dots, I think incorrectly when I was thinking about this. It seemed coincidental to me that the whole notion of FDX kind of started up roughly the same time that the open banking PSD2 regulations were going up in the UK and EU. So I thought that might have been the impetus for you guys starting, but it sounds like that was truly more of a coincidence.
Yeah, it was. The Payment Services Directive really was a result of a couple of different things. In Europe, it's a hyper-concentrated market. In the UK, there's 9 banks who effectively have 90-something% of the market. In Germany, I think it's 4, now 3. In France, it's 2. You have large institutions, and so you have this hyper-concentrated market, and yet you have people who, because of the size of the nations, are doing cross-border payments frequently. And so they were looking for a way to increase competition. In North America, we have over 15,000 financial endpoints, very different space, everything from community institutions, one branch wonders, up to $1 trillion multinational entities. And so it's a much broader and competitive space. So the issue we were trying to look at really had been around for almost 30 years, and that is the idea of credential-based screen scraping. So what we were trying to say is, listen, how do we modernize this? And how do we de-risk a big chunk of this? How do we get consumer fully in charge of this and make sure the customer is clearly consenting to what they're doing, so the privacy is protected? How do we make sure there's no orphan access, so that when you delete an app, that data is still not being pulled? How do you make it visible so the customer is aware, and parties along, everyone in the chain is aware of what data is passing and has the ability to pull the chain on that train and stop it?
And you make a good point, tying it back to Section 1033 about personal data rights. Again, that's one of the things that the aim is to try to basically the death knell for screen scraping. So if we accomplish that, then I think everyone would agree that's a net positive.
It's a net positive, and the cool thing is we're building blocks here, and people are already adding to it. It's not just checking, saving, credit card. We have mortgages, CDs, IRAs, auto loans, student loans, investments, pensions, crypto assets. We're seeing payroll. We're also seeing corporate treasury. We're also seeing tax forms. And we also added the ability to report fraud. So oftentimes fintechs are the canary in the coal mine. They'll see pre-fraud before funds are, to use a big fancy word, exfiltrated from an FI. And so we now have a mechanism within FTX, we just released it in version 5, for a fintech to be able to let a bank know, hey, I'm seeing something weird with Glenn's account. It's this particular account. And by the way, here's a payload of the indicators of compromise. Nobody else on the planet has that.
Yeah. And again, just thinking of the different value proposition, like you say, you've got a small number of players overseas, so there's a greater desire to open things up. As you say, we're close to 20,000 endpoints here, which to me, if we're going to move forward, that just makes this kind of standard setting that much more important to get everybody on the same page, because otherwise you just got a big mess out there.
It has to be. I remember not that long ago, cell phones, you used to go to trade shows and they would give you a USB adapter that had 6 or more extensions hanging off of it. Now do that times 20,000 proprietary endpoints, it would be huge.
Or just even thinking about the bugs on the back of the credit card, back when every individual network was can I use this one at this gas station? I don't know.
Yep.
Well, Don, this is fascinating stuff, and like I say, extremely timely. I think I've been out to the website. You've got some great content out there. Is that the best way for people to find out more?
Absolutely it is. And again, we've got a lot of free materials for your listeners to not only read more, but also share up in their organization. And I encourage everyone to get a copy of the spec. It's free. That's why we made it. Just come register. Just have to promise not to try to patent it.
And that, again, that's Financial Data Exchange spelled out.org, correct?
That's correct.
Wonderful. Don Cardinal, Managing Director of the Financial Data Exchange, FDX. I'm sure we'll be talking some more. Thanks so much.
Thanks, Glenn.
So taking a closer look at the website, the usual players, it's, as he mentioned, as Don mentioned, the vast majority of credit unions are engaging through one of their service providers to actually make these things happen. And sure enough, I knew that already that PSCU was heavily involved with the Financial Data Exchange. You also see FIS, Fiserv, Jack Henry, CSI. They're all listed in the standard category of participants. Notably, none of them are in the sustaining member category, which is kind of the other higher tier, which has, I think, about 20 members. And those are all the big boys. Those are the big players, the Bank of Americas, the Capital Ones, et cetera, et cetera. So, that is interesting. Also, along with those service providers, I do notice the Mountain America, Navy Federal, and as we talked about in the interview, UW Credit Union. Those are all prominent members as well. So there's also a very heavy Canadian presence, including on the credit union side. So I thought that was pretty interesting too. And we talked about if you want to get really nerdy about it, Section 1033 around personal data rights. One of the things the Fed's talked about is if there is going to be a standard, and we think that probably there has to be a standard if you're going to mandate this type of data exchange. They say there won't be just one. But financial data exchanges, like I say, pretty far along, and something that I think you want to take a look at because we're likely to kind of be moving in that direction. Again, just like I talked about with the Take on Payments blog, I think this one's worth bookmarking. Hopefully you found this conversation useful, and I think it's timely, but it's also timeless. I think this could be a good reference point for people going back and looking further into what's happening in this space. So hopefully you may want to go back, and I'll probably be referring back to it as well as we learn more about where we'll be going with Section 1033 and the credit union requirements and obligations around personal data rights. If this one's not for the faint of heart, but I'm also going to include a link to the CFPB's page on their website around what they've been doing around that proposed rulemaking. The comment period closed all the way back in December. There is, a lot of synopsis and what they've actually proposed. The original proposed rulemaking was 290 some pages. They've got a scaled down summary version of that. You can also scroll through and find all of the letters that were submitted for comments, and there were a ton of them. And you may want to take a look at FDX's and CUNA's for that matter too. And it is CUNA, although they worked in concert with NAFCU. This was before the merger, so I think you have to probably search on CUNA to find what they had to say. With that, another episode of the Big Cast in the books. Again, my name is Glenn Sarvadi. You can track me down via my firm, 154 Advisors. You can find out more about the Best Innovation Group by checking out the website, big-fintech.com. You can also find the archive of all of our past episodes on the Media tab there on the website. When you're listening to this, if you're listening right when it came out, I will be down at the NACUSO Network Conference in Orlando, Florida. And as I always do with those types of events, my plan is to come back next week with some interviews that I've gathered there. And we'll be sharing kind of the people and the thoughts and ideas and the topics that I found really jumped to the top of the table at the conversations at NACUSO. So hopefully you'll look forward and join us again and check in for that. That'll be posting next week, the week of I guess we'll go live, I'm thinking the 23rd of April on Tuesday, as we always do. New content on Tuesdays here at the Big Cast. Always love to hear from you. You can find us at the website. You can also track down the Best Innovation Group on LinkedIn, on X, on Blue Sky, myself as well. You'll find them at Big FinTech, as well as our Grand Poobah John Best at JB FinTech. And you'll find me at 154 Advisors on X and Blue Sky as well. With that, another episode of the Big Cast in the books. My name is Glenn Sarvadi, and as always, thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech. Email info@big-fintech.com. Or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.